Hi everybody, this is Ospreyeye from mychartcoach.com, and we are looking at ticker symbol GBSN. Okay, this first chart here is a daily chart. As you can see, GBSN was down nearly 27% on Friday on big volume. There was a volume spike, so over 50 million shares traded. There was a bounce off of the 50-day moving average at 0.09. That is the green line on this chart, and that is the line in the sand on this chart here. That is the key level to hold. As you can see, there were bounce players. This lower wick on Friday's candle shows people bounce players loading off the bottom. And so the close was on Friday was above the 50-day moving average, 50-day simple moving average. And so going forward, if GBSN can hold that level, there should be a bounce, and that would equal upside potential. If the 50-day moving average turns into resistance, that's going to signal downside risk. So bulls, you do not want to see this green line turn into resistance. If you look up here at Fasto closed below 20 at 1921, so it's now at oversold levels. And there was a bear cross on Friday, and RSI is now closed at 45.60, is now below the 50 to 70 bull zone. And then I mentioned the red volume spike, and then MACD is pinched over here and starting a bearish crossover. So as you can see, the MACD line is the black line, and the purple blue line is the signal line, and now the MACD line is below the signal line. So a bearish crossover is starting. The two are pinched, so you do not want to see that. That would signal the start of this downtrend. And if you look at the next chart, this is another daily chart, and this is showing the Bollinger Bands and EMAs 4 and 8. And as you can see here, there's this close. The middle Bollinger Band is the dotted purple line currently at 11, and there was a close below that level on Friday. And so that close right there is signaling downside risk, because on this candle here, the big flag candle, there was a close on this candle here above the middle Bollinger Band, and then the candles ran up, and then here there's a close below the middle Bollinger Band. And so when GBSN was uptrending, the candles were riding above that level, and then now the candles have broke below that level. So that is signaling downside risk. And going forward, candles forming below the middle Bollinger Band, okay, are going to equal downside risk and possible start of a new downtrend. And then it's going to, bulls want to see candles forming above that level and a new uptrend to start. EMAs 4 and 8 at 11 and 12 are the key levels to break after the middle Bollinger Band. And so that's what we're looking out for here. We're looking out to see, now that middle Bollinger Band support broke on the daily chart, we're looking to see if GBSN can quickly bounce back above that level, or if a new downtrend is starting. So there was the reverse split took place. So we'll see what the what the reaction is to the reverse split on Monday. Yeah. So these two charts are showing that GBSN is possibly is testing resistance or testing support, possibly starting a downtrend. And then this next chart is a 15-minute chart, and each candle represents 15 minutes of trading. This is just a 4-day chart, and right here on the 11th on Friday, the open was below the middle Bollinger Band, dropped below the lower Bollinger Band, and this signaled downside risk. As you can see, there was really tight trading into the close on the 10th. If you look at this this right here, this area right here, notice the upper Bollinger Band and the lower Bollinger Band. Look how tight, how constricted they became right into the close. So this was signaling that this consolidation period that took place during these candles right here. Notice the sideways trading. The Bollinger Bands were wide, and they got tighter and tighter as the trading consolidated at the same level. And so this was telling you into the close that there was going to be a move, either a breakout or a breakdown from this pattern but either the upper Bollinger Band or lower Bollinger Band was going to break. And then this candle right here, when you saw that at the open, that was the big red flag. That was signaling that more downside risk. And so the breakout was to the downside. So you really wanted to, for future reference, when you see the tight Bollinger Bands, know that that's setting up for a move. And if you're long, you don't want to be holding when the chart breaks down. And so now this is a downtrend. Candles are forming below EMA's 4 and 8 and are forming below the middle Bollinger Band. So there is a downtrend on the 15-minute chart. There was this giant volume bar into the close. As you can see, there's this wick, this lower wick on the candle, on the closing candle, and what this showed was people were loading off of 9. So there were, there was loading into the close off this low day level. So we'll see. Are these bounce players loading for the reverse split, or were these people exiting? Probably a little bit of both. But look down here at MACD, and you can see there was a bullish crossover into the close. So the MACD is signaling that there's possibly, that happened with this move above EMA's 4 and 8 right here. When EMA 8 broke, there was at the same time there was a bullish crossover, and so now going forward, if the candles continue forming below EMA's 4 and 8, you're going to see a MACD bearish crossover, and so keep an eye on MACD on the 15-minute chart, and bulls, you want to see the green line stay above the red line. If it crosses below the red line, that's going to be signaling downside risk. And let's look at the last chart here. The last chart here is another 15-minute chart, and this is showing, if you start back here on the first day of December, so right here, you've got the from this candle that hit up here at 26. The share price has been dropping consistently for multiple days. So you have this 8-day drop. From 26 all the way down to hitting below 9 on Friday. So that was a big, going into the reverse split. That was a big haircut in the share price. You can see the volume spike here and the close. So we'll be seeing if bounce players are going to be stepping in here, or now that the share price is going to open up, much higher, right? It's like a 60-to-1 reverse split. So with this close here, it should be opening in the close to $6 range. So we'll be seeing if how the share price responds. And so if you look up here at so this chart here shows the 50, the 100, and 200-day moving averages, and what this is showing is the downtrend, and there was this descending triangle pattern, and as you can see, each support level kept breaking. So there's a break below 11, then it dropped down to 10, and then now the share price is testing 9. And what this is showing over here on the first, the candles were up here when the share price was at 26. The candles were forming above the 50, the 100, and 200-day moving averages, which are the green, gold, and red lines. And then now into the close, the candles were forming below all 3 levels. So this is further showing the downtrend that's been happening since the peak on December 1st. So bulls, you want to see candles forming above the 50, the 100, and 200-day moving average to signal more upside potential. And if candles continue forming below all 3 levels, that's going to equal downside risk. 9 is the key support level to hold, and 10 is the key resistance level to break. Okay, thank you for viewing this chart. Please check out our website at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.